all and go cross-asset with Erin Gibbs. She's with us, President and Chief Investment Officer of Gibbs Wealth Management. Going to be running up to this market close with us, Erin, and I want your take on what growth looks like for you. Why is the market getting worried about what the 10-year yield is telling us?
Well, I think part of it is, unfortunately, we're still within this period of concerns about the coronavirus and not being able to fully open the economy, and with some concerning or changing sort of unknowns just about mask or not mask that often shakes the markets, even though as we've seen, earnings have been pretty much on par and stable. So I think that's one of the fears, and we've been dealing with this for the past year. So that's to be expected. It's certainly not fundamental. Ultimately, as we're going through earnings season, the numbers are looking stellar, both for the past quarter as well as going forward. So I think the real fear is these long-term interest rates, and perhaps if people are really buying and pushing yields down just a little too high out of fear rather than fundamentals.
Yeah, I mean, that certainly has a lot to do with it, Erin. And there's obviously a short-term story here that people want to protect themselves. I guess when you talk about hedging and I guess just staying invested in the market but being safe against any sort of potential downturn here, I mean, what do you recommend folks do? Buy into treasuries?
I think the longer dated, absolutely. I'm not the biggest fan of the short dated. I think the longer dated still have some opportunities to go even higher. Obviously, yields go down lower. I think that's one of your safer bets. And in protection, I'd say on the equity side is really try to avoid some of your higher valuation companies, the ones that are really priced for perfection, that have seen extraordinary gains in the past 18 months, and that's mainly your mega caps, but also some of the financials and energies that have really seen big gains that certainly look like they're going to be struggling either between lower oil prices or between a lower yield curve.
Now is Erin Gibbs, President and Chief Investment Officer of Gibbs Wealth Management. Erin, thank you for sticking with us here. If there's anything you will take your profits in right now and start to sell out of, what are those names? What are those sectors that it's time to really start to pull back in?
So financials, energy, those are the two big ones, as well as any of your mega cap techs. I think those are really the ones where it's time to take some money off the table. They probably appreciated quite a bit in the past year and a half. And that's where you want to reallocate into something that has better price appreciation, though they still are some of the best growers, but they're priced for being the best growers. And I think there are other opportunities that you can use, particularly over the next 12 months.
Okay, interesting. If the big cap tech names are sort of priced at perfection, Erin, do you think that the overall benchmarks just have to go lower? Because, and what does that do to sentiment? Because if big tech doesn't play ball, it feels like you can never have a green day.
Well, actually, to a certain extent, obviously, they are the mega caps. So we saw for most of the beginning of the year that mega cap tech was doing very poorly, but value was supporting and the index was going up. So yes, you can absolutely have the major indices go up as long as you have your other industries, your undervalued industries, supporting the core index. So we're not completely reliant on them just yet. But even today, you see that both growth and value are down about the same amount percent, which is unusual that they're trading in tandem. So it's a combination of your materials, your industrials, and your tech stocks that are doing so poorly today. So the world is not completely revolving around mega cap tech just yet.
Yeah, not just yet. Okay, so let's turn to something maybe a little bit more optimistic. We keep asking you all these questions that are so dour about all the concerns about the Delta and the economy here. Erin, when you look a little bit more longer term here and you hear some of the feedback from clients about, I guess, the money they might have made over the last couple of years in this market, despite some of the economic issues here, I mean, what are folks generally looking to here with regards to sort of the longer term investments? What types of industries, what types of companies?
So we're looking, and generally I advise for core, but of course there is this renewed interest. You hear of all these tales, obviously, of these smaller cap companies coming back, and then we still have the days where it's sort of a a Reddit day, right, where all the Reddit stocks are doing well, and it's the beaten up stocks that are doing well. And we've even got a couple of those today, Ralph Lauren popping up and bouncing away from some of its lows. So some customers are really focused on, oh, I'm missing out on these stocks that were up 300%. And then I have other clients that are really focused on just how do I protect myself? I don't want all of this volatility. I just want to be able to ride it out and do well longer term. And you just try to balance that greed versus fear, depending where that client is, to get them where they want to be longer term. And so I've always focused on longer term growth, and still keeping some valuation within scope, not trying to buy too much at the peak.
Not trying to buy too much at the peak. Overall, you sort of talk about what people are worrying about, sentiment with the money that you are managing, the investors that you have. Are they wanting to commit new money to this market? I feel there's always a proverbial cash on the sidelines, but when they are looking at valuations so high on the equity side, when they're looking at yields so low on the bond side, are they wanting to allocate, or are they keen to sit out and try and find a different entry point?
Right now, I don't have anybody that was sitting out. It was a much harder story last year, but given the rebound and how quickly it happened, pretty much everybody had changed their tune by earlier this year. And also, it has a lot to do with just what the stories you're hearing around the coronavirus. And essentially, once the vaccinations really got underway with the U.S., all my clients are U.S. based, that really changed the outlook and the sentiment. And so now it's really more about, am I willing to take additional risk, investing in smaller cap or mid caps, versus being in my nice, comfortable mega cap techs. And that's more of the pull and push that I'm focusing on now and getting to hear from now.
Erin, I'm trying to get a handle on how people feel about taking on risk in this part of the cycle. You have Bitcoin down almost 5% right now. Is this something where people see buying opportunities in riskier assets? Are your clients buying Bitcoin right now? Or is it something where they want to wait a while for whatever reason?
So I have never been a big Bitcoin, let's say, advocate. And my clients tend to be a little more conservative. We're talking about retirement money here, not so much new investors or younger investors where they're just more willing to lose it all or take on that additional risk. More about asset preservation as well as growth so that they can use that income from that. But I would say that certainly, they are very willing to take that one-off, one or two stocks that are really your gambling stocks, that are exciting, and they're willing to have that diversification. So I'd say that there is a certain amount of risk that people are willing to take, much more so as economies get open. It's really about that type of sentiment that I see more and more risk taking.
Erin Gibbs, great to have you with us, President and Chief Investment Officer of Gibbs Wealth Management, as we ride towards this